Yeah, I'm long the 300 puts. There's my 20. Yeah. So I've got two 300s right here. This is from Legacy, and I got three of these, the 2010s. But what if we come over to this Friday? Could I? What's the same one that we did before? We did the 350, 355s, and we got 50 something cents. Not the greatest credit, but you could do a 50-55 call credit spread for this Friday and bring in 34 cents. So if you did the 368 and you did what I did, bought back the 57, 49, whatever it is, boom, boom, and you got 319, 68, yeah, 319 is your cost. What if you did this and price stayed above 350? It's at 329 right now. The price stays above 350, you bring in 34 cents, boom, boom. Your cost is now 285. 285 on a 10 wide vertical. That's fantastic, right? So you could do that. Let's take a look at the chart before we think about it. Stubborn Tessie. Look how it loves to just eat up moving averages, like ba-boom, ba-boom. Does this do this? Well, it could. So where's 350? I would imagine 350 is somewhere above here. Boop. Right there. Yeah. It's literally this top right here is 350, which you can see it could not get above. So I would say, boom, couldn't get above it there either. Boom, came above, but then fell right below. I'd say 350 is pretty formidable. Wouldn't you? I like it. There's two things you could do here. One is you could wait until we get below the daily 50. That's fairly significant. You see how it gets bought up right here at the daily 50? You see how this comes up to the 50, stalls, boom, 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 and then gets bought for a little bit. Retest, fail, boom, fail. Once you get above here, let's retest. It held, it went up. So 50, really very significant. Look at what it did here. Bang, right down to the 50. Look where it got bought. Right here. At the 50. So that's why we talk about the 50 period moving average. So why does it do that? Because institutions like looking at a 50-day time horizon. So if you take the closing price of the last 50 days and plot it in a line, that's what that is. It's the average of the 50-day or 50 days of closing price. So they like it. Historically, it's been something that they've been watching. And so they've got algorithms programmed to buy at the 50, sell at the 50, or turn it off completely and let it just shoot right through. But they're watching it. Analysts, hedge funds, institutions, companies that buy blocks of stock, Tesla, retail traders like you and me. Everybody's watching the 50. So if that's true, and they're also watching the 200, and they're also watching the 20, and they also look at the 100, and they look at Bollinger Bands, and they look at the RSI. So if they're all looking at it, don't you think that's a good reason for us to be sort of watching what they're watching? So if you see price get below the 200 and it closes below, that means nobody came to bail them out. The hedge fund algos clearly were not programmed to buy at the 200. Although in this instance, maybe they were. So look, you see how there's a little wick right here? Is it possible? Is it possible that maybe as price came down, the hedge fund said, let's buy some of this. Maybe. So maybe we wait one more day just to see, because if it goes up here, like right now I got 319 at risk, right, for that vertical for September. Do I really want to lean into the trade right now, not knowing what it's going to do when price currently is sandwiched between the 200 and the 50? Would love to see it break here. So if it breaks here, I just might add to the trade. We'll see. But the question is, do you want to put a little vert here, 50, 55, and bring in 33 cents of credit or whatever, and bring my cost down? I'd say this is pretty safe at the moment. In fact, if price went up, tomorrow is Wednesday, Thursday, Friday, I could always roll this trade or close it out. I think I got enough room here, don't I? Well, let's see what the market makers think. So I'm taking you around the horn with what I'm trying to do in this session. If you guys haven't figured it out, I'm talking nonstop. For those of you that are new, like, what the heck? Can he freaking slow down? But by the time I take notes on one thing he says, he's on to the next. This is my, I hate using the term stream of consciousness, but I'm literally talking out loud as I look at the charts as if you guys weren't here. So if I wasn't live and I wasn't doing this with you all in the room watching me, this is what I'd be doing, yakking out loud, looking at my charts. That is what stream of consciousness is. I guess it is. Stream of consciousness, man. I don't know. Just something about that phrase goes against I don't know, who I am. I don't like using phrases like that if I can help it. I use more stupid phrases that are more common, because that's just how my brain thinks. I think in common things, common phrases internally in my brain. So I'm just sharing with you my stream of consciousness. It's just not me. So I'm just really walking you through what I see and speaking it out loud. And I have found over the last 5.5 years, it's a great way to teach people. So I've got the 200 period moving average, I've got the 50 period moving average. I'm sandwiched in between. Pretty much feel pretty good about throwing that on. So I think I'm going to. So let's go over here. Michael says 355. I could. Let's just see what else we could do here. What about 352? So if you were a little cautious here, you could do the 352 half by 357 half and bring in 22 cents. You could do that. That at least brings you above 350. So I guess that would be a good trade suggestion, wouldn't it?
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.